Hello everybody. Welcome to the first show on our channel. Purpose of this channel is to provide you investment advice to help you invest in equity market. The principles will be discussed which will be applicable to all global markets, but specific advices will be provided which will help you invest in Indian market. I know many of you are probably already thinking, is this the right time to start a channel like this? The world is reeling under the attack of coronavirus. People are dying everywhere. We are getting thousands of new cases being reported from every corner of the world. One third of world population is living under some kind of a lockdown. Is this the right time? I believe this is the right time because apart from people suffering, there is another headline. Every newspaper and every website is telling us we are heading towards a recession. And if experts are to be believed, this recession is going to make 2008-9 recession looks like a child's play. How about that? Now we all know recession is contraction in economic activity. But what does that mean and how that relates to lockdown? Let's take two examples. Right now, travel is restricted, almost banned. Airlines industry, railway services, even local buses, they are all they have all stopped service. But they are paying their employees simply because at this time of the hour they don't want to stop the paycheck and cause more misery to their people. They have a fixed cost to run a business, rents and insurance, they never go away. On top of that, they are paying their employees, they are not generating any revenue. So what is going to happen after the lockdown period? These companies will have seriously depleted cash balance. They will have to scale back their operations. Some people working in the airlines industry, railways, and even working for the local bus service going to lose their job. Now let's see what is the indirect impact of that. Many of these global companies like British Airways or EasyJet or Lufthansa, such big names, they have their IT services supported from India, primarily from Bangalore, Hyderabad, Pune, places like this. So some of those employees are going to suffer as well. Some of them may end up losing their job. Salary will be less, no promotions, no hikes. So these guys will have to postpone any property buying, any car buying. Worst come worst, they may have to sack their household employees. So this lockdown started in US, impacted Delta Airways, and end of it, a housemate in Bangalore is going to lose her job. How about that? That's the chain reaction. Let's take another example. Right now, all high street shops are closed. So the fashion brands, all the clothing stores, everything stopped. How many people work in that industry? They are also consumer of other industries. So once these shops reopen, they will have to scale back. The clothing industry will scale back. Many people are going to lose their jobs. When people lose their job, what do? They stop going to restaurants, they stop going to pubs, they stop travel, they just stick to essentials. Even if someone doesn't lose job, if he or she sees that some of their colleagues are losing job, that's a psychological fear. They will stop buying non-essential stuff. So demand will go down across every industry. What is government doing about it? Government is doing two things. But before I go there, who am I to talk about such things and why would you listen to me? And what has equity market to do with all of that and how am I related to equity market? So I have been investing in Indian equity market from 2004-5 and I have invested very actively up to 2014-15. For past 4 years, I have been investing in UK share market, and Brexit I was actually a boon for me. Let me put it that way. And then I did my MBA from Said Business School, Oxford. In a 1 year MBA course, there is no specialization, but my concentration was on economics and finance, which has taught me quite a bit about this. I have another person in the team who is a seasoned investor and he has been investing in Indian equity market for a very long time now. He also provides investment advice to other folks. And hence we are here. So going back to the topic in hand, what is government doing about it? Government is actually trying to do two things. At this point, government is injecting huge amount of money into the economy and also reducing the interest rate, benchmark interest rate. So injecting money in the economy, that is the primary purpose is basically to feed people during the time of lockdown. Many people cannot afford the basic bread and butter. We all know. In every economy, there are people like that. Government is trying to feed them, keep them fed for this period. The next thing is when government inject money in the economy, that essentially means starting government projects. So as soon as the lockdown is over, this money will be utilized to start new infrastructure project, new hospital, new schools, and create jobs. Believe me, there is no government under the sun who can go on feeding their people forever just like that. Job creation is the only answer, and that's exactly what governments are trying to do across the globe. The next thing, government is reducing the benchmark interest rate. Again, the same thing. When the interest rate goes down, corporate can borrow money more cheaply from banks, and that will help them spin up new projects. The heavily cash depleted corporates post lockdown period will be struggling, and this money will help them get back their operations and help them start new projects, again job creation. But what does that mean for you on a personal level for coming months? One, you may lose your job. I may lose my job. Next, even if I or you directly don't lose our jobs, there will be people around us losing jobs, and that will be a huge mental stress for us. The money we saved in the bank will get us less interest. Why? Benchmark interest is going down. When we keep money deposited with banks, banks use this money and in a way that they lend this money to corporate. Corporate use this money to run their business, to grow their business, make profit, and they pay interest to the bank for the money they borrowed, and this money is actually income for the bank, and bank distribute this money back to the person who has deposited money with them. So if the interest rate is going down for corporate to get money more cheaply from bank, obviously bank is going to reduce the interest rate for you and me, common people like that. So is all lost? It's looking pretty grim at this point, right? No, there is a silver lining. This is actually, in a way, a lifetime opportunity. Believe me, this is a lifetime opportunity if you can make use of it. This is the time to start thinking about what we can do to help us survive for these months and actually have some benefits out of this situation. And that is exactly why I'm here. I'm talking about investing in equity market. And I believe if we act now, we'll be actually surviving this situation. We'll be actually surviving this situation in a very pretty good way. Now let's talk about some facts and figures. Right now, all major indexes across the globe, Dow Jones, FTSE 100, Nifty, everything is down by 30-35%, sometimes even more. So every company share value has gone down by 30-35%. And that is because people are dealing with this coronavirus thing, which is obviously a very bad thing to happen to us, but at the same time, it's as well a panic attack. People are just selling stocks because they are dealing with unknown, and that is causing the price to go down. And this will continue for some time. So if we look at Indian equity market has gone down just like any other major market. It has gone down by roughly 40% in 2 months' time. How about that? Now, index, if there are beginners watching this session, index, what is index? We'll be discussing that in a later session. But right now, we can assume that index is nothing but health indicator for equity market. So if index value is going up, that means equity market is going up, index market is doing good. If index value is going down, that means equity market is not doing so well and market health is in the negative territory. When you associate a value with the index, you can actually invest against an index, and that is how you can make money when overall market is going up, and you may lose money when overall market is going down. So basically tied with the index is one way of investing. We will, again, this is another topic to be covered in the later sessions, but as I said, let's go and visit some facts and figures. 19th April 1999, Nifty was at 1000, exactly 1000. Before the coronavirus thing, in January month, Nifty value was somewhere around 12,500. So it's common math. From 99 to 2020, 21 years, if you would have invested 1,000 back in 1999, you would have got 12,500 now. So 12.5 times. I know. The next obvious question is, what about the financial meltdowns in between? There were financial meltdowns in 2001-2 timeframe, WTC, and then there was a financial meltdown in 2008-9 timeframe, the global financial meltdown. Let's take some data there. Let's see what happened at that time actually. Right in front of me, I have some very interesting details. 21st February 2000, Nifty value was 1750. 21 months, less than 2 years, it went down to 950, 46% down. And then 19th December 2003, from that down point, exactly 13 months, it came back up to 1750. What goes down must come up. So if somebody would have invested and stay put and never tried to sell shares during that 2002, end of 2002, and just remain calm and quiet, they wouldn't have lost so much. Same story repeated in 2008-9. 14 Jan 2008, Nifty value was 6250. It in 1 year period, it more than halved, 55% down. It came down to 2870, and then it took 22 months to bounce back. It came back up to 6200 exactly in 22 months. What goes down must come up. So that is the lesson learned everywhere. So if you can avoid panic selling or panic buying and just stay calm and quiet during financial crisis, you are actually not going to lose much. You are actually going to gain just being calm and quiet for a long time. How about that? So there are many myths that financial meltdown like this actually cost you money, is very harmful things. You should avoid such things. So there will be a Mythbuster session. The next session on this channel is going to be a Mythbuster session. For now, just note one more fact. More than 50% population in US invest in equity market. More than 30% population in UK invest in equity market. Same statistics, almost same statistics is applicable to Western European countries. In India, less than 1% public actually invest in equity market. We are missing out a huge opportunity, and that is something we will try to address as best as we can. So the next session is going to be Mythbuster session. The session after that, my partner will come and he will provide direct tips and so on. The plan is there will be 2 sessions every month from both of us, and hence, so stay with us, watch our shows. I'm sure there will be some benefits for each and every one of you. And this is a journey, this is a beginning, and let's start it now. Let's use the time we are getting because of the lockdown by studying, by getting better prepared for the days to come. So, guys and girls, for today, bye and see you in the next session.